Broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome. My name is Mike Morris. I'm the Southwest Regional Director for the National Center for Appropriate Technology. NCAT's a national nonprofit organization that works on sustainable agriculture, sustainable energy, sustainable communities, and local food. We're happy to be hosting today's webinar, Do Organic Farmers Want Crop Insurance? For the past few years, NCAT has been working on improving crop insurance options for organic farms. We're near the end of a multi-year project called Is Organic Farming Risky?, which will be coming out with a report and recommendations in the summer, so please stay tuned for that. This project is funded by the Organic Agriculture Research and Education Initiative of USDA's National Institute of Food and Agriculture, or NIFA. We are extremely grateful to NIFA for supporting our project and for making today's webinar possible. We're very fortunate to have Dr. Eric Belasco as the lead researcher on our project, and you are all lucky to have him as today's speaker. Dr. Belasco is an associate professor of agricultural economics at Montana State University. He has published over 30 journal articles on crop insurance, farm policy, risk management, and livestock marketing. At Montana State, Eric teaches courses on agribusiness management and financial engineering, and he's received numerous awards for both his research and his teaching. Along with other colleagues in his department, he was recently awarded the Outstanding Extension Program Award by the Western Agricultural Economics Association. Today's webinar will last about an hour, and I have just 3 quick housekeeping items before we get started. First, today's webinar is being recorded and will be archived for later viewing on NCAT's ATTRA website. That's www.attra.ncat.org, and we'll put that up at the end. On the ATTRA website, you'll also find dozens of other webinars and literally hundreds of how-to publications, videos, podcasts, directories, and all kinds of tools related to sustainable agriculture. So please check that out. Second, you'll see a field on your screen during the webinar where you can submit questions at any time. I will be collecting your questions and I'll pass those along to Eric at the end. He will answer as many as he can at the end of the webinar. And if we don't have time to answer your question during the webinar, we will really do our best to answer it by email in the coming week or so. Finally, at the end of the webinar, you will see a short survey pop up on your screen, and we'd really appreciate it if you would just take a few minutes to answer the survey. It does help us improve our future webinars. So without any further ado, let's get started, and I'll turn things over to Eric.
Thank you very much, Mike. So as Mike mentioned, my name is Eric Belasco. I'm at Montana State University, and I'll just start by thanking NCAT for all their support on this research. It's always great to be able to do research with an organization that is able to help extend past the university. So I want to thank them for that. This webinar is entitled "Do Organic Farmers Want Crop Insurance?" And as Mike mentioned, this is supported by a NIFA grant. Is Organic Production Risky, which we're at the tail end of, and I'm very excited about some of the research that's coming out of that program. So one of the motivations for that grant, as well as this webinar, was really the lack of information regarding organic farmers and crop insurance. And this is illustrated if we go back to the 2014 organic survey, one of the first organic surveys. And they asked organic farms, whether they purchased crop insurance or not. And of the sample, 20% had said that they did purchase crop insurance, so 80% do not. And they asked those farmers who did not purchase crop insurance why they didn't purchase crop insurance. And a couple of responses, about 2,000 of the responses said it was too expensive. Others said they were unfamiliar with crop insurance, but the lion's share said that it was other. And just what is meant by other? Could it be that these farmers, they just don't want crop insurance, or could there be some other reasons for that? So one of the things we're really hoping to dig into is to ask, get a little bit more nuance with regard to this question. And so some big picture topics that we're really looking at. First, do organic farmers want crop insurance? We see a lot, 80% who are not purchasing crop insurance based on that survey. And so is it just that, do organic farmers, have they looked at crop insurance? Have they, evaluated whether it would work out for their operation and just decided this doesn't work for me? Or are there other reasons? Secondly, who is motivated to learn more about crop insurance? So the risk management agency spends a lot of resources in trying to educate farmers and ranchers with regard to their insurance policies. And so one objective of this study is to really help to guide some of those efforts and make sure that they're targeted at the right populations where they can have sort of the biggest bang for their buck. So where should those education programs be focused in order to increase crop insurance participation? And then third, if we look at organic and diversified producers, they tend to be the two groups with lower participation rates. So what are some of the main barriers to crop insurance for those producers? So do they just have a willingness to pay that's too low, that maybe is lower than the premium rates that they're being offered? Is it an education issue? Is it just that they don't know very much about those policies or how they would fit into their risk management strategy? Is financing an issue with regard to some of these farms? So the relationship between crop insurance and operating loans is certainly an issue where economists are spending a lot of time right now. Is that an issue that we should be exploring? And then finally, what are the risk management preferences for producers with direct consumer markets? So one of the things we found out with this survey was that we really had an opportunity to learn a lot about a range of different producers, where some of them would use organic practices, others would have organic certification, and just does that matter? And so really looking at our organic certification versus organic practice. And then also looking at whole farm revenue protection. So that program, it was developed to really hit and target diversified producers. And all the incentives are aligned so that if you are buying that policy, it's really aimed for people who are producing a lot of crops. The premiums go down, for example, as you diversify more. And so who was that policy serving? We wanted to look a little bit about that. So those are kind of our main objectives with this survey. And kind of, just to give some context at the beginning of this survey, there have been a lot of really substantial changes to organic crop insurance. So one of them was there used to be a 5% organic premium surcharge, which meant if you were an organic producer, you were charged a 5% surcharge. And that was dropped in 2014, which would have brought down the premiums if you were an organic farmer buying those crop insurance policies. The second change was the contract price addendum for organic commodities. And that was extended not just for organic commodities, but also for other commodities as well, where we see this especially in organic production, where you're not selling through the traditional marketing channels, but you might have a contract with a buyer, and you could use that contract to establish your price guarantee, which again, I think was a positive shift for organic producers. Third, and I mentioned earlier, the whole farm revenue protection, which you'll see I might mention it as WFRP because that can be kind of a long product name. But the development of that, replacing some former iterations of that policy, as well as the ongoing improvements. And we'll talk a bit more about that later, but just think of whole farm revenue protection as a policy where you can insure your whole farm. So if you're growing 10 crops, you would insure your revenue across those 10 crops, which can really be appealing for farmers who have a more diversified operation. The main idea there is that your guarantees, your insurance, it's all based off of your Schedule F form, your adjusted gross revenue. So as your revenue goes up or down, and that might be from one of the commodities, it might be from all of the commodities, but the idea was to ensure the farm revenue. And so we wanted to see, do some of those changes, have they positively impacted participation? Fourth, the contract price addendum was extended to transitional acreage. And as we know with organic producers, especially going through that transitional phase, it's hard to know what your price, should your price guarantee be based on a conventional crop or should it be based on a certified crop? And so the fact that these products would extend to allow for the contract price, again, that's the price that you're given by the buyer, really opens it up for organic farmers to have a better insurance policy. And then finally, we see the organic price elections grew from in 2011, we had 4 crops that were insured. In 2018, was 79. So a lot more crops allowed for this organic price election. And the basic idea there is that we know that organic crops can be sold for a higher rate than their conventional crops. And so the organic price election allowed for farmers to grow an organic product and get a price that was more in line with an organic price. And so we can see those, from kind of the major 4 crops in 2011, have really grown to 79 crops today. So a lot more coverage in organic crop insurance. And with those improved offerings, we've also seen an increase in participation. So there's 2 lines here. The blue line is the amount of organic acreage that is insured. And we can see that that has increased steadily since 2007, really increasing a lot since 2013. The red line shows the liability. So that's the amount of value that farmers are insuring with these crop insurance policies. And so that's grown by an even faster clip than the acreage. So not only are more acres being insured, but also a higher value of production is being insured in the organic production area. So we set up this survey again to try to dig into some of these questions that we had at the beginning. We did an online survey, which would really allow for just a better, higher completion rate. We thought an online survey would be easier for people to fill out. We tried to keep it fairly short. We still snuck in 46 questions. It didn't take too long. We're obviously trying to balance having the survey being, providing more information, trying to balance that with, getting farmers to actually complete the survey. We know that their time is important and we wanted to keep it to, 15 to 30 minutes. We did offer an optional honorarium, which surveyors could sign up for at the end. And essentially the survey was anonymous except for kind of the mailing of that $20 check. I think one of the unique features of this survey was that we were able to really hit a large group of organic and diversified producers. And we did that by really targeting specific areas. For example, we used the USDA Organic Integrity Database to mail out some invitations to fill out this survey. So every organic certified operation is going to be receiving this invitation to go online. So I think that really expanded our base and allowed us to get a good national representation of organic producers. In addition to that, we also used NCAT's offices, the ATRA Weekly Harvest newsletter, and then also used some major organic groups across the country. So Moses, for example, really helped to market in the Midwest. My own state organization, the Montana Organics Association, for example, marketed this as well. So these groups were critical to helping to get the word out to make sure that we had a good survey response and that we could really find out some of these questions. So we had about 1,500 people who started the survey. The first question that we asked in the survey is whether you're a commercial producer. And a couple hundred said no, and so we didn't want people who weren't commercial producers. From that, people went through the survey. Some people dropped out. At the end, we were left with about over 1,000 survey responses. And we went through and found some duplicates. We got it down to about 1,032 valid survey responses, which again, was really great survey response for what we were looking to do. One of the concerns, especially given that we were marketing this through some major organizations, was that we would maybe have some not a good spread of representation. But as you can see here, we have representation in a lot of different places. So in the West we have California, Montana, getting out there and getting a lot of surveys. In the South we have North Carolina and Arkansas, even some in the Midwest, Wisconsin. But throughout, you see a good representation across the U.S., which again was important if we're trying to survey not just a few areas, but really organic production across the U.S. So one of the first questions we wanted to know is how many years has the person filling out the survey been farming? And as you can see here, we have a lot of new farmers. If we look at the new census that just came out, we see that there are a lot of new and beginning farmers out there who are just getting started. So really from 0 to 5 and 6 to 10, we see a good amount of farmers in there. But what I liked about this outcome was that we also see a good spread. So we do see a decent amount of more experienced farmers as well. People have been farming for over 40 years, for example. So a good spread in this was important. We also know that farmers can farm at much different sizes. A lot of the farmers out here where I am in Montana tend to be larger than in other areas. We wanted to make sure to have a good spread in the size of farm operations. And again, consistent with what we'd find in the census, we see a lot of very small farms, but then here we also see some of the larger farms. So a few farms over 10,000 acres, quite a few over 1,000 acres. So again, looking for a good spread in this variable. Do you farm full or part-time? This is a really important question, especially as we're trying to link crop insurance to production. And we think that if somebody's farming full-time, maybe their income isn't fully reliant on their farm income, whereas if they're full-time, it's going to be more important for their overall well-being. And so just drawing this distinction, I think, is helpful when we're looking at crop insurance decisions. We asked what description best fits your operation. Again, to get a good spread in what these farmers are doing. The largest was in high value or specialty crop production, followed by grains and legumes. And then, what we see is kind of a sprinkling also of some different livestock operations, which we would expect with organic and diversified operations to include, cattle, hogs, sheep, and dairy, things like that. So again, what we're looking for is a good spread so that we can make some inference and, look for different commodities and see, if you're growing high value specialty crops, what are your preferences towards crop insurance? To be able to draw some of those distinctions is important to have some good numbers in each category. Diversification was an important thing that we were looking at here. So how many different products do you produce? And as you can see, from 1 to over 60, we have a pretty good spread. And initially what we thought is, let's really look into some of these really diversified farms. Really, when you talk about maybe over 20 commodities, are these farmers buying crop insurance? Are they finding value in that whole farm revenue protection product, which is really kind of targeted more towards them? The other thing that I'll mention here is that, again, we're looking for a good spread. We're looking to see if you're growing one or 20, what's the difference in your outlook towards crop insurance? The marketing of your farm products can have an important, can be importantly linked with your risk management strategy. So if you're selling to a farmer's market or a restaurant, maybe your risk management is different than if you're selling to a grain elevator, for example. So we wanted to see where farmers were marketing their product. And also keep in mind throughout this, and we'll talk about this a little bit later, but that in our survey, we wanted to include not just organic farms, but also conventional farms. And the reason for that is because we want to see if organic farms are different from our conventional farms. And so by having the two, we can draw contrast between the two and just to see, should programs be marketed differently to organic producers, for example. The other thing I'll mention here is that producers who are selling to farmers market, restaurants, and farm stands, really in the economics literature, they're not well understood. So really getting into their risk management practices is, I think, a really good opportunity with this survey. We asked what farmers' annual gross revenue was, and we gave these different bounds, to kind of fill into. And again, you can see a pretty good spread. We have a few farmers with over $1 million in annual gross revenue, and then others between 1 and 10,000. So again, trying to get a good spread in some of these variables was an important thing. And I guess one other thing that I'll mention is we use this variable for some of our analysis where we look at whole farm revenue protection, because that program is based on your gross revenue figure, your adjusted gross revenue. And so getting a sense for what their average gross revenue would give us a sense for what the guarantee would be. And we're also going to ask what some of these farmers' willingness to pay was, and looking at their revenue, adjusted gross revenue, is going to give us a really good indicator for some of those products. Have you ever had an operating loan? And this was a critical question that we wanted to know about, because we thought, banks and crop insurance are so linked these days. Banks, a lot of times will not force someone to get a crop insurance, policy, but a lot of times a crop insurance policy allows a lender to offer a better rate to farmers. So we know there's a link between these two things. The ability to expand your operation really relies on having crop insurance. And so what was surprising was, we do have a fair bit who have never had an operating loan, about 65%. But then we also have some, to varying degrees where they use operating loans in other ways. And another way to think of this, and we'll talk much more throughout the presentation about this, but an operating loan, the use of an operating loan can also be an indicator for how commercial a farm is. So a lot of times you'll see some of the prerequisites for an operating loan are going to be sitting down with your banker. You're going to have to, collected some records, looked at a farm balance sheet. Do you have those records? And having those records, we find, is pretty compatible with participating in crop insurance. And so for a number of reasons, we do find a good link between operating loans and crop insurance. Again, it was surprising how many do not have operating loans, though we have a lot who are new to farming, a lot who have smaller operations, but we also have a fair bit of observations where there is experience with an operating loan. Maybe not every year, some years almost 20%, every year about 10%. We asked farmers about their organic farming methods, and what you'll see here is interesting. So almost 60% indicated that they use some organic farming method on all of their acreage. And so, this is an interesting thing, because we also ask about certification. So we want to know about organic practices in organic certification. So, keep in mind here that we have very few of our survey responses say that they don't use organic farming methods or even use it on a low percentage of their acreage, the vast majority use organic farming methods on all, if not most of their acreage. When we asked about is the farm USDA certified organic, we see 70% that say they're not certified organic. About 20%, all of it is certified organic, and then the remainder have some degree that is certified organic. And again, what we wanted to look at is to what extent does organic certification matter with crop insurance? And we know that with a lot of the price elections, organic certification is very important. And so we wanted to see, just be able to draw a distinction between those who are organically certified and those who are not, and see what their difference in risk management practices were. And again, we want to have those who have USDA certified organic acres, and we want to be able to contrast them with those who do not. So again, it's important to have some in both categories. We also wanted to know, of those who have organic certification, what is their experience? And if you have organic acres, there's a big learning curve with organic production. And we looked to those who've been doing organic production for a long time, and we wanted to see, was there any difference in the way that they perceived risk versus someone who's just getting started out? So, for example, if we have someone who is very experienced in organic production, take this group where it's 16 to 20 years. They've been USDA certified for a long time. Are they going to manage their risk through production rather than through crop insurance? Does that matter at all? We asked another question about, really to solicit some ideas of perceived risk. So we asked farmers about how often does your gross income fall below 75% of its average level. And, you could think here, if you answered this question, 1 in 10 years, it falls below 75% versus more than 5 out of 10 years. So if you said more than 5 out of 10 years, you're saying more than half the time it falls below 75% of my average level. So for those people, we think crop insurance is going to be really valuable because they're going to be triggered payments. And what we're looking at here is something similar to how a whole farm revenue protection policy would be triggered, where your adjusted gross income falls below 70% of its average. If that were the case, then that would trigger an indemnity. So we're looking for, what is your likelihood of an indemnity being triggered? And again, the further to the right you were on this graph, the more risky you perceived your production to be. A fair bit of people said they didn't know. Those tended to be a lot of the newer farmers. Age is obviously an important one. One of the concerns we had when we set up the survey was that we would oversample younger farmers by having it online. But I was very pleased to see a good range of different ages. In fact, an age range that is pretty consistent with what we find in the Census of Agriculture. The one thing that's slightly different than what I guess you'll find in the census is that our respondents are very educated, or more educated than the national average. So we see a lot with graduate degrees, some graduate work, and then completed bachelor's degree. And we went through some of these organizations, which I think these organizations tend to bring in higher educated farmers. And so this is definitely something that was interesting about this survey. Okay, our next slide. So we started to ask people how likely they were to buy crop insurance in the coming year. And as you can see, so what we were looking for again was a good range of people who are thinking about it, and to see, if there was zero chance, why was that? And we asked that as kind of a follow-up question. But you know, what's interesting here is we do have a fair bit who said 0 or slight chance, but then we also have a good range of producers who, you know, have it as pretty likely or definitely buying crop insurance. So again, this variable is going to be used as a way to distinguish between, you know, those who are more likely to buy and those who are less likely to buy crop insurance. We also wanted to know how motivated people were to learn more about crop insurance programs. And again, this is motivated by that RMA program that comes out and is, you know, devotes a lot of money to educating farmers. Who are the farmers who really want to learn more about crop insurance? And what we see here is that, you know, there are only a few farmers that would say they're not really, you know, motivated at all to learn about crop insurance. 90% at least have some motivation to learn more about crop insurance, which, you know, I would say is promising for some of these education programs. We asked if someone had ever bought crop insurance. So contrasting that against, you know, are you going to buy it next year? Have you ever bought crop insurance? So is there a history of buying it? We see here 65%. So they had not bought crop insurance in the past. And then we have a range of individuals who have bought it to some extent. So again, you know, the never category was fairly high, but keep in mind, you know, that survey back in 2014 had, you know, organic producers at about a 20% participation rate. And so, you know, while, you know, this number might seem high, it's fairly consistent with what we would expect in the market, especially if we're looking at diversified operations as well. And so, again, we're trying to get a good grasp of, for those who have not bought crop insurance, what are some of the barriers, and are they barriers that, you know, we can overcome with education or with some other you know, tools? So we followed up that question by asking, just for those who said that they rarely or never buy crop insurance, we asked them, why haven't you bought crop insurance? What are up to the 4 biggest reasons? And the first 2 reasons, the top reason was that my farm is too small. It's not worth the trouble. So, you know, record keeping, you know, you can think of that, keeping records, you know, and that would be records that you need to keep for an operating loan as well as for a crop insurance policy. But my farm being too small, not worth the trouble, what that indicates to me is that, you know, the crop insurance isn't as, so these might be some of the part-time, you know, farmers. They might also be new. Maybe they haven't, you know, they're in the 0 to 5 acres, but they just believe their farm is too small and it's not worth the trouble to look into or learn about crop insurance. Second, my farm is too diversified. It's not feasible to insure all these products, which really speaks to, I think, the whole farm revenue protection. You know, those are the farmers that program is really aimed at. I don't know anything about it. So again, 2 and 3 you can think of as being coupled around an education, you know, focusing for some of those education partnership programs through the RMA. The third, it's just too expensive. You know, too expensive. There's not much you can do about that. Someone who's, you know, looked at the cost of insurance, they've thought about how much they would benefit from it or what it would, how it would help them, and they've just determined that it's too expensive. Few, if any, policies are available for the crops I grow. And then I've never really looked into it, but I doubt that it would work. So some of the top ones I think really speak to more diversified farms not finding the crop insurance policies that work for them. It could point to an education component, but it could also just indicate a barrier for more diversified producers or smaller producers. You know, we see large producers, you know, especially if they grow one crop. You know, I know in Montana, for example, they tend to buy crop insurance in pretty high numbers. But it's some of these where it's a small farm, it's diversified. There's some extra barriers that I think we need to be cognizant of. So we asked those farmers, we asked all farmers, what's the most you'd be willing to pay for essentially a whole farm revenue protection policy. We kind of framed it like this, but the basic idea was, so we asked them, did you buy crop insurance? And then we asked them, well, if this were available, what would you be willing to pay? And so some of them put, 0. So you have some that are not interested, 15%, just under 15%. But the rest gave us some measure, and we can look to this. Keep in mind, we have information on each farm's adjusted gross revenue, so we can look at the amount they'd be willing to pay divided by their adjusted gross revenue. We know how many acres they grow. We know what type of farm they have. So we can really dig into their willingness to pay for some of these insurance products and match that up against what the policies cost, so that we can look and see, for those that say it's too expensive, is it too expensive? Or perhaps they haven't seen how much the cost of these programs are, and just getting a sense. So maybe they said it's too expensive, but maybe their willingness to pay is just a little bit lower or a little bit higher. So maybe it's close to what the actual rates would be. So this gives us a lot of information as we move forward. And in the next few slides, you'll see these used. So here's our first slide, getting at breaking down some of the variables, just to give you an idea for what these farms look like. Again, looking at high value specialty crops, we have a lot of observations in there, 754 observations that define themselves in that way, 270 define themselves as grains and legume farms, and then 258 classified themselves as cattle operations. And so we can see, if we look at the percent of production that is certified organic, we can see that anywhere from 20 to 40%, depending upon the commodity. If we're talking about high value specialty crops, about 25% is certified organic. And then the percent of production that is organic is 77%. So 77% is utilizing some organic production technique, and 25% is certified organic. We can see that the acreage on those high value specialty crop farms is much smaller than the grains and legumes. That's kind of what we would expect. Experience also a bit different between those two groups, and age all seem to be kind of in the 45 to 50 range, which again is pretty consistent with what we'd expect from the Census of Agriculture. We wanted to know who was buying whole farm revenue protection. Remember, this is that whole farm policy that insures all your crops. And so we looked at the groups. We had 45 in our sample who did purchase it, tended to be more grains and legumes producers, followed by high value specialty crop producers. So of those producers, we want to know how they differ from the rest of the sample. So who was buying whole farm revenue protection versus the rest of the sample, and how are they different? One thing that was interesting that we found was that those who purchased whole farm revenue protection tended to be much larger. So their acreage was over 2,000 acres on average versus 425. Now remember, these tended to be grains and legumes farmers, which might be part of that. They also tended to have more experience. So the experience averaged about 27 years. So more experienced farmers tended to purchase whole farm revenue protection. Their willingness to pay per acre was a little bit higher, which we would expect. Again, these are farmers who are actually purchasing this insurance product. So we're thinking that they are likely to value insurance a little bit more. So their willingness to pay per acre was about $153 per acre, whereas for the rest of the sample is about $115 per acre. And then the willingness to pay per adjusted gross revenue. So this is, if the RMA has rates that they charge, this is kind of what we would think. And most of the rates I've seen have been anywhere between like 4 to 8%. So here we see, for those who purchase it, they value it at about 11%, which is much higher than the rate that they're actually being charged. So it's not surprising that they're actually buying the products. Whereas the rest of the sample is just below kind of what I would think of as the typical range for some of those products, 3.5%. Diversification seems to work against someone buying whole farm revenue protection, which again was surprising, this product is geared toward those who are more diverse. So we'd expect for diversification to encourage purchasing of whole farm revenue protection, but we found that those more diverse operations tended to steer clear of insurance. We can also break these groups up between, and I mentioned this earlier, when to break them up, see if certified organic really matters here. And we have 3 groups. We have certified organic producers who buy insurance, certified organic producers who do not buy insurance, and then we have those who are not certified organic. And so interesting again to draw some distinction here. We see that the certified organic producers who buy insurance tend to be more commercial in this. They tend to have higher acreage, so they have 4 times the amount of acreage. They tend to be more experienced than those who do not buy insurance. Their willingness to pay per acre is lower, which is somewhat puzzling. But if we take that in terms of adjusted gross revenue, they're actually both pretty close to one another. The other thing that's interesting here is that we asked them if they are interested to learn more about crop insurance. 92% of those who buy insurance were interested in learning more about crop insurance. So those who are buying it are thinking, okay, there's more I could learn about this program. Even those who don't buy it, 46% of them said they were interested in learning more about it. Finally, the last 2 columns, we see adjusted gross revenue. Again, the more commercial group being those who buy insurance, much higher adjusted gross revenue. This shouldn't be surprising. We also saw higher acres and experience as well. But then also what was interesting was the different products. So those who bought insurance tended to average 9.5 different products, whereas those who did not buy insurance tended to have an average of 22 different products. So again, the more diversified producers, the very diversified producers, tended to steer clear of buying crop insurance. So all these findings are very interesting, I think, to kind of draw the distinction between does certified organic insurance, should we look at them differently? And I think some of the findings here would say that some of these characteristics are very similar to the conventional counterparts in that we tend to see larger operations with more experience and higher adjusted gross revenue. We tend to see those are the ones who are buying crop insurance. So what we're going to do next is run through a few slides looking at what I call these interest gaps. So these interest gaps are going to be, we looked at whether they were interested in learning more about crop insurance on the blue bar, and then on the green bar, it's if they've actually bought crop insurance. So, if we think of the gap here, an interest gap might not be the best name for this, but really is a group interested but not participating in crop insurance? And that might be like, if I'm a salesman, these are the people I might be targeting because they want to learn more about it, but they're not currently buying it. And as we can see here, the largest gap tends to be with those with the lower amount of adjusted gross revenue. Those with a high adjusted gross revenue, they tend to be very interested in crop insurance. They tend to have a history of buying crop insurance. But those with lower adjusted gross revenue, they're very interested in it, but they don't really have a history of buying it. So again, this is a story we'll see throughout these next few slides, this big gap. If we look at it by commodity, we can see certain areas where this gap is larger. So for example, high value or specialty crops, we see a very big gap in interest in history of buying. Grains and legumes, a very small gap. For example, some of the cattle areas, we also see a fairly large gap. Operating loans, we mentioned this earlier. Again, this, if someone's using an operating loan more frequently, they tend to be a little bit more commercial. And so we can see here, for those who have never purchased an operating loan, or even in some years, we see there's a big gap between the interest they have in learning more and actually buying crop insurance. Experience, kind of the same story. Less experienced farmers have a big interest in learning more about crop insurance, really learning about how they can integrate crop insurance into their own production. And then the orange bar, very small history of actually buying it. And honestly, this is consistent with my experience of speaking to groups that are less experienced. There's really a lot of questions that they have about insurance, and it's just, how do I utilize insurance into my own operation? And a lot of them don't have a history of buying crop insurance. Okay, so, and I'm getting kind of to the end here. Just kind of the big picture questions that I started with at the beginning. First, so do organic producers want crop insurance? This was sort of the presentation title that I had, and I guess the conclusion, at least from this, is yes, organic producers do seem to want crop insurance, but not all of them. And you can say the same about conventional producers as well. Some of the things that matter in conventional production are the same as with organic production. For example, scale, commercialization, diversification. These things all matter to organic producers as well as to conventional producers. So, I would say the improvements that the RMA has made in organic crop insurance offerings has all been great. It's all increased, organic participation, but there's still some room to grow there, as there is with, conventional producers as well. Second, how can education programs be better focused? So, one of the links that we found was with operating bank loans, scale, and commercialization. So how can we combine that with using crop insurance policies? One idea is to really combine crop insurance seminar with good record keeping. And I've put on seminars like this before, where we have, a local loan officer who comes in and talks about, getting that operating loan, what information you need to have, and then also coupling that with a crop insurance agent or, someone who can talk about some of the crop insurance programs. So I think linking those two together is a great idea for some of the education programs. And then third, what are some of the main barriers? I mean, it does seem that the main barriers to crop insurance, especially for organic and diversified producers, bookkeeping is just a major barrier, and especially for diversified producers, because the bookkeeping, the cost of learning and getting started with bookkeeping and keeping good records is just much higher for those operations. And so I would say that's the biggest barrier. Second is really, understanding those marketing channels and just how diversification can be better integrated into some of those crop insurance programs. So those, as I see it, are kind of the main barriers to some of those producers. Just in conclusion, throughout the survey, I think we find that commercialization and scale are some of the biggest determinants for crop insurance participation. And I think, we shouldn't stop there and just say, okay, we should only focus our efforts on those large and commercially viable operations. But, as I go and I talk to, especially less experienced farmers, there's definitely some questions that they have, and there's an interest in wanting to integrate crop insurance into their own operation. So there are these large gaps that exist, and just some of them pertain to less experienced farmers, high value specialty crop farmers, and then also just small farms that don't tend to use operating loans. So just how do we find products for them to manage their risk, I think, is a good question to proceed with in the future. So with that, I want to thank you all. Again, I want to thank NCAT for all of their support here, and just say, here are my contact information, on Twitter and my email. If you don't get a chance to ask your question today, please follow up with those, and I will continue to just provide some information to follow up with NCAT. So thank you so much for your time.
Thanks, Eric. Well, we do have a few minutes left, and we do have several questions from our listeners, and I see a few of you are still typing, so we'll get as many in as we can here. The first question is this: it would be really interesting to see the rate of growth of organic farming alongside the growth in the use of crop insurance in organics. Is part of the story that way more farmers, including large or contract farms who might run in circles where crop insurance is the norm, are now growing organically?
Yeah, that's a good question. So is that growth in crop insurance coming from just the growth in organic? And y- it, it is a good question. So I haven't. I'm just kind of shooting from the hip here, but I do think part of that is attributed to the growth in organic. Although my guess is that, especially as farmers, you know, transition into organic production, crop insurance policies are not catching all of them. And so I do think there are probably some that, find other ways to manage their risk. But definitely, a lot of that growth, I mean, some of the growth you could attribute to more product offerings from the RMA, including more products, uh, better products as well with some of those contract price addendums. But then, yeah, without a doubt, looking at the growth in organic has also picked up some of that growth. But that's, as a researcher, that's a great question to ask, and I'll have to dig into that a little bit more.
Okay, fair enough. Here's another one. How can this data help determine the riskiness of organic farming, or if the organic crop insurance policies are really helpful to organic farmers, given that there is not a large response rate from certified organic farmers? And the listener noted that around 70% of the survey respondents were not USDA certified organic.
Mm-hmm. Right. Yeah, that's a good question. Even with that low response rate, you can still think we have, 300 organic certified producers out there to really look at. And, I've worked with much smaller data sets than that and been able to find some meaningful results. So, I think the sample size is adequate to do some analysis on that group. The question about the riskiness of those groups is a really good one. In this survey, we really just ask about perceived riskiness. So we don't really get into, I mean, there are other studies, and actually I'm working on some follow-up studies to this that are looking at the actual riskiness of organic farming versus conventional farming. But for that, you really need you need some records from a producer to look at them over time, understand maybe their yield variability, their revenue variability. And I've been using some data out of Minnesota that looks at organic farms and conventional farms over 8 years and really assesses their riskiness over that time. So, I guess the short answer to that long-winded response is, we can really just look at their perceived riskiness with some of the questions we asked, but there are some other studies that I'm working on that are going to look at the actual riskiness of those farmers.
Okay, here's another one. I'm involved with the RMA Targeted States Crop Insurance Education Program. This is going to be a paperwork question, Eric. Do you have any recommendations to help highly diversified, small acreage, direct market producers get enrolled in whole farm revenue protection? I've spoken with quite a few producers in New England who are interested in whole farm revenue protection, and the biggest obstacles seem to be that the records required and the paperwork process is onerous. Those with farm stands, CSAs, and farmers market sales often don't have the sales receipts that satisfy the enrollment requirements, and some agents are reluctant to spend the time necessary to get someone enrolled.
Mm-hmm. That's a very insightful question, and I guess it's consistent with some of my experiences as well. I think there is, and that's something that you hear, especially from diversified farmers who distribute through many different marketing channels. Keeping separate records can be just a real big challenge. And part of that, I guess, goes to the policy itself. But I guess in trying to get, people enrolled, like with any policy, I find it helpful just to have an agent to come and talk about the actual enrollment process. I can't make any suggestions on how to make the actual enrollment process more streamlined, but I can definitely say that's and that's one of the barriers that we found as well, which was farmers who have who grow a lot of different products and who use a lot of different marketing channels, especially if they tend to be smaller. there tends to be barriers, and I do agree that paperwork is probably one of those barriers, especially with the whole farm revenue protection product. So, I think that question comes from someone who's definitely put in the time, and I have many of the same questions. So, thank you for that.
Okay, we got a couple more questions and a couple more minutes, Eric. Here's one. It seems that there's still a need and desire for education and outreach on crop insurance, yet the RMA education program is no more, and the education program is now run through the NIFA regions. Is there any data on geographic areas that are more or less knowledgeable about crop insurance?
That's a good question. Yeah, and I'm not aware of that change from the program. I know we have a risk management education partnership this year that we're doing with some of the tribal colleges in Montana. And so as far as I know, they still go through the regional offices, the RMA regional offices, although I could be wrong. As far as knowledge on crop insurance, I don't know. That's a very good question, and I think that's one of the things we were trying to get to in this survey. Although it would have been interesting to ask, more specific questions about their knowledge. One thing that was pretty clear was that even those who participate in crop insurance, they tend to have even more interest in learning more about crop insurance. So I guess I would say it's not just those who don't know a lot about crop insurance who are interested in the education programs, but those who buy crop insurance also tend to be more interested in those. So it's really both groups that I guess you could think about targeting. And one thing that we've seen in Montana, for example, is, those, especially if you have a diversified operation, you might buy crop insurance for some of your crops, but maybe you're unaware of some of the other crops, or maybe you don't, you want to be sure you're making the right decision. And so, I'm not aware of a national study that looks at the awareness of crop insurance, but I would say, the results from this survey indicate kind of across the board that even those who are buying crop insurance are interested in learning more about it.
Okay, here's another one. Related question, how does this play out by regions? Are the very large certified organic farms all California and Western farms, or is what is considered a large farm in the Midwest more likely to buy crop insurance? Can we assume that?
That's a good question. I haven't looked into that, although that does seem like an important question. So is the concern is that the larger organic certified production is all going to be clustered. And my guess is that you would probably have the same clustering of organic certified production that you would get in conventional production. So you might find some of the larger farms, especially seem to be in grains. And so you might see a lot of them, particularly in the Midwest and kind of the Northern Plains region is what my guess would be. But I'm not sure. For California, we did see a lot of the specialty, high value specialty crops tended to be a little bit lower in acreage. So I don't know if we are picking up the California, but yeah, no, that's a really good question and something that I should look more into.
Okay, just one last one, an easy one. Somebody's asking if you'd mind showing the slide with the survey respondent distribution again, and I'm guessing they probably mean the geographical distribution, but I'm not sure.
By state, yes. There we go. Yeah, so we have, we do have a fair bit in California and in Texas as well. Montana, I know a lot of that, the Montana Organics Association really helped us, get the word out. Moses, helped us in Wisconsin. And so there's definitely some, states that have provided a lot of input, although I think those are also the states where you see a lot of organic production. And so I think, the spread there does tend to be some clustering, but you know, that's one thing I guess to look into is that responses, is that consistent with what we would find if we looked at the Census of Agriculture?
Okay, well, all good things must come to an end, and unfortunately, that's the top of the end of the hour. So we'll wrap it up. I want to thank you again, Eric, for the presentation, and I want to thank you personally for all the great work you've done over the past few years as our lead researcher on the project, Is Organic Farming Risky? To listeners, I would just note that we did ask 46 questions. What Eric just showed you is in a way the tip of the iceberg. We have a lot more analysis that we will be reporting out when we send our report out in the summer. I would also just remind you that this webinar has been recorded and it will be available within a few days on the ATRA website. If you missed something or wanted to look at some of these numbers again, you'll certainly be able to do that. Once again, please take the survey that will pop up on your screen in just a few seconds from now when we bring the webinar to a close. So have a good day, everyone, and thank you for listening.